let's go now to our friend Bimnet Abibi from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thanks for having me.
So, Bitcoin and ETH are not doing great.
Yep.
We'll talk a little bit about any effect that we've seen from the attack on Israel. But what is the status of markets in your view right now?
Crypto markets trade heavy right now. There is a very distinct sort of dislike or lack of favorability for ETH right now. ETH BTC is down pretty meaningfully over the past month, around 10%. Some of it has been because the FTX exploiter has been, TWAPing some ETH. But I generally think it has to do with the fundamental case for ETH as well. The lack of follow through on the ETH futures product, in addition to a lack of any meaningful positive catalysts in ETH. In addition, you have competitors and L2 tokens, etc. And I like to think that I think Bitcoin's got a great story and it's going to outperform. It's going to be one of the better outperformers this year if you get an ETF or going into Q1. And so just on a relative basis, it doesn't seem that compelling. And then with broader markets, the main concerns were obviously around the events of the weekend in Israel. The immediate reaction was oil jumped from $82 a barrel to 86. And you had some correction in equities, and we've eventually bounced back. And then ultimately, it's led to a little bit of a risk-off move in treasuries, and we've caught a bid. And that relief in treasuries has helped generally support price action in equities,
which is like the opposite of historically how it typically would be.
And so now I think we go back to what was originally driving markets, which was this price action in bonds, and you've got a really important data point tomorrow in the CPI.
Right.
And so, I think if you get a soft number, you'll see, continued relief on, in bonds, and that should cause, equities to rally. High level, though, I think you're just at such a weird place in markets. The part of me is like, oh my God, there are so many things cracking. Look at credit card delinquencies, auto delinquencies. Look at the number of people that have part-time work. Look at, wage growth, coming in a little bit lower. Like there's so many signs in the economy that, we're rolling over a little bit. However, the structural things just have not changed in the economy. Like there's going to be tons of bond supply. And the government is probably going to spend 6% of GDP on their deficit, in perpetuity. The labor market is still tight in terms of there's still huge mismatches, among skills and labor. In addition, there's 9 million job openings already. We just had a huge surprise in JOLTS, and so there are signs that support both arguments. And ultimately, I find myself in the camp of, the curve has got to steepen. If you think that the economy is going to slow down, then the Fed's likely going to cut more and you'll get more cut pricing. That should mean that twos rally. And you still have tons of long end supply. And so, the curve steepens. If you think we go higher in rates because the economy is really strong, the Fed came out this week and told you that moves in the back end, right, or effectively tighten financial conditions to the same extent that a rise in front-end interest rate does. And so it seems like if rates are going to go higher, right, in general, we're going to get a bear steepening of the curve. And if rates are going to go lower, you're going to get a bull or a bull-bear steepening of the curve. So either or, it kind of seems like you're set up for steepening, and that's kind of my bias at the moment. But it's really tricky, especially now that you've thrown in a geopolitical conflict on top of that. In addition, I genuinely, I think the Fed's making it up as they go, just responding to these data points and stuff. And, the fact that they felt obligated enough to have 5 Fed speakers comment on the extent of the back end, selling off, like when it's totally justified and when you're still hiking, right? You're still telling the world that, you might need to hike, you might need to take rates more, financial conditions more restrictive, and yet you feel the need to comment that it might not justify hiking in the front end. It's so messed up. And part of the interpretation of why back end yields have risen is
Yeah.
because some market participants view the current Fed as one not willing to fight the most important battle with inflation, which is the last mile, right? If the Fed right now is like, oh, we're close to done, and they're not showing that vigor to really stamp out inflation, right? Then that means inflation is going to be an issue in the longer run,
Right.
potentially. And so I think that that's a kind of
That's interesting.
a reason for some of the sell-off in the curve, because market participants, like the whole 10-year paper or 30-year paper, you need to be confident that you're getting real returns that are meaningful. And so
people are doubting the Fed's resolve here as we're in this
I am, absolutely.
and we're in this hike regime right now where they're sort of sputtering along, kind of signaling they might be close to done, and yet inflation is still elevated. Although that's why you're saying big number tomorrow to see what CPI.
Yeah, and it's also, I mean, we've had this discussion before, but what people still fail to realize is the Fed is going to claim victory over getting the rate of price changes to a reasonable level. Right. So that the price increases are somewhat more manageable.
Right.
It does not address the fact that certain aspects of the economy, and certain price levels, have gotten to astronomical levels. Right. So if rent in New York or in anywhere goes from $1,500 to $3,000, rent doubled. Right. And then starts going from $3,000 to $3,100.
Right. That's a win in their mind.
That's a win in their mind. But it is absolutely nonsensical because the real incomes haven't actually kept up for those price levels. And so you're just in such a weird situation. And the Fed's going to be quick to declare victory because they have a huge issue, which is 6% of GDP going towards deficit spending.
Right, they've got to
every year.
lower those rates if they can, as soon as they
can't-
can, basically.
Yeah, because
They can't keep them higher for longer. They just can't. The government will essentially bankrupt itself, and
or the Fed's going to have to just start accumulating,
yeah.
buying the bonds, and so it's such a weird situation. Like, what is victory?
yeah.
What does victory look like?
We've talked about this before too, about how a decline in inflation actually means a slowing of the growth rate of inflation.
Correct.
Versus
It
it doesn't mean things go back to the
deflation.
way they were.
Correct.
Deflation. I'm thinking about that great video of quantitative easing explained from Omid Malekon, where they're saying, but isn't the price of milk higher than a year ago? Yes. Isn't the price of airlines higher than a year ago?
Have you seen orange
Yes.
juice prices?
Exactly. And airlines too, just recently too. I know the last couple CPIs, they were elevated a component, and I'm seeing that as I travel. I mean, prices are almost double from where they were 6 months ago for basic
and then
commuter flights.
this is another debate, but are we even measuring the right things? Do they capture the is the CPI basket really indicative of what people actually spend money on?
You see people. There was a video that was going viral from TikTok. I saw it downstream of TikTok on Twitter or X.com, and it's a guy going around Costco comparing all the prices, being like, "Dude, these are ridiculous."
Yeah, way higher than they were.
And not 3-4%, 5%, 20%, 50% higher.
Correct.
And this is Costco is a large wholesaler, right? It's
they got the best prices.
Exactly. Exactly. That hot dog, I don't know how they keep that hot dog at $1.50 though.
I think it's $1.99, but
did they raise it? No,
is it $1.50?
Whatever. I think it was $1.50. I'm not sure, but it's been flat for decades. Anyway. Yeah, it's a tricky situation.
It's tricky, but I just I what I want is just a level of communication from the Fed that's a little bit more factual, not more factual, but just speaking to people, being like, we just have such big. They can't acknowledge the fact that I guess the deficit spending is totally out of control.
They're not talking
now.
about the deficit
Because apparently, they've got no control over that, so they only respond to whatever.
Even though these are revolving doors. I mean, the prior Fed chairperson is now the Treasury Secretary. It's the same.
Insane.
And they can't acknowledge to regular people the truth, which they and the government should be clear with. Prices aren't going to come down, most likely.
No,
they almost never do.
Yeah.
And in fact, the Fed's terrified of deflation as well, right? I mean, they think that's a huge impediment to growth, long term.
No, absolutely.
Right. So not only won't they really can't. They don't want them to come down. But I don't think people. I mean, you hear this from both people in government. You hear it from you don't hear at all anything from the Fed. But declaring victory against inflation when it'd be great if people were clearer with
No, absolutely. But then there's just
The market knows this
Then
stuff.
there's just the obvious stuff that, like, you know, we can. This is a topic for another day, but you know, you're gonna have like social unrest or social issues at some point. Like these policies in general, like lead to widening like wealth inequality.
Right.
Right. Like if nobody can now afford a home, it's like all the homeowners are gonna do great.
And even like the deficit
Right.
spending and the debt has been like a like a macro watchers issue, but as that interest payment grows and grows, it'll become a real significant issue for fiscal allocation that really does impact a lot of what they can spend money on.
Absolutely.
And that's
and
going
it's
to
like
cause
what are
issue.
the things that like people tend to cut first? You know, they
don't cut defense first.
They
Let's
don't
put
cut
it-
it's like the marginal programs that
Right.
help the needy and stuff like that. And just you know, it's
Right, so the pain will start to be felt. You're right. There'll be more pressure over time.
and it's also like what's going to perform well, like equities are going to do okay in the environment. Like generally, like assets are going to do fine. And if
Right.
the Fed starts cutting again, like it's assets.
And then we're right back to where we were.
You're going to have the inflation
The
again.
asset owners
but yeah,
growing
so
wealthier.
here's the real like crux of the issue, is the risk of reinflation,
Right.
right? And
It's
like
that chart from like the 70s and 80s.
Arthur Burns and Paul Volcker,
Yeah.
right? Like it's
That's how you go into like multi-decade financial and economic hardship as a country, right? With when you just constantly are oscillating. I mean, inflation got as high as like what 20%, or was that one print? How high did it get?
I think
Very high though.
I know interest
In the
rates got
teens.
yeah.
Interest
like,
rates were up in the 20s.
Yeah.
Yeah.
And so I would think
Because that
somewhere
was
in
one of his
ballpark.
ideas too, right? That you had to raise rates above the inflation rate. In
Yeah,
order to get
that
it down.
fundamentally, every
Yeah.
time you wanted to get inflation down, you got to get it above.
Right.
But it's like
Yeah.
it's a hard issue, and I think that the trades are easy, which is long Bitcoin because the fiscal stuff ain't changing anytime soon, and gold, and Paul Tudor Jones on TV, yesterday making a great case
Yeah.
for the two. I would recommend that clip.
Love to see Paul back out here talking about it.
Yeah, let's get Paul on Galaxy Brains.
Give him a call. See.
No, yeah, and so I don't know if the market has such a nuanced understanding of it. Frankly speaking, like I think a lot of equity investors just woke up to bonds like a month ago,
Yeah.
and what it means, the shape of the curve, and stuff, and so some of these points are probably not as appreciated right now, but 6 months from now, 9 months from now, a year from now, I think they'll come to a head.
Yeah. Bim Nadabibi from Galaxy Trading. Thanks so much, my friend.